Hi, good day. This is 𝗲𝗄𝐿, your host for today on Forex Web Experts Fundamental course. Now, in this course, we will highlight especially the fundamental facts and how to track those to know about the fundamental situation of any trading instruments we actually do target. Now, about the trading instruments, we usually choose gold as a commodity. For indices, we may choose US 30 or NAS 100. For currency, for the reference, we may choose some of the major currency pairs such as GBP USD, Euro USD, AUD USD, NZ USD. That means USD related currencies because so for now we all know that since 1992 US has been the major reserve currency of the world. Now let me just break you down through the fundamental analysis part. Now, most of the traders think that fundamental analysis is solely relatable to trading on the news, but which is not true because fundamental analysis consists of many elements. Like news is one of the elements. News data is one of the elements. I would like to say that one of the key elements, but also political developments, geopolitical advancements or improvements or issues, global economic condition, uh, and moreover, global trade balance and economic stability is also related to fundamental, analysis. So we will try to cover, the most of the things in this course. So for now, on this first class, we would like to share you our our topic on the economic indicator. So here in this video, we will try to share you what actually the major economic indicators, that means news, are that actually we mostly follow while trading on international markets, especially on the derivatives markets. Now, this is our website. So those who are not that much familiar on our website, let's take a look before proceeding to the course. So in this website, you will get our signal service details, our course related details, and also our recommendation on forex brokers and prop firms, and also our signal group related information. We also publish many articles, and obviously the fundamental facts on day-to-day basis. If there is any advancement or improvements on fundamental facts and issues, we try to let you know before the US session on any market day. And also we share market trader sentiment outlook over here, which is actually redirected from internet sources, especially my FX book. And here you will get the top stories. So our main target is that as a trader, if you want to trade the markets, you have to attain skills that actually correlates to the technical aspects, the fundamental aspects, and also intuition and sentimental aspects. So our goal is to train the traders in these three aspects so that they can be a complete trader and make a difference on trading the financial market. So let's just hop into our courses. So our first part of the course starts with explaining about the economic indicators. So let's just hop into it. So on the major side, we will be referring to the indicators related to US dollar as a reference, because more or less US dollar related news are affects mostly in the derivatives market because it's correlated to other currency pairs and also commodity markets. So for the reference, we will use US dollar related references, and also, you know, as a first world country like USA, like Canada, like Australia, New Zealand, or let's just say UK or many other European nations, these economic indicators are kind of like convey the major meaning or fundamentally those are correlated too. So that's why for the reference we are focusing on US dollar related news. So if you put all these logics to other countries' economic indicators, you will see the the similarities between them. So let's just move on. So let's start with the GDP, gross domestic products. Now this measures the total value of goods and service produced within the borders of a country in a specific time period. Now GDP reports can be of three data sets, like Y/Y, which actually depicts the yearly based GDP data. QQ depicts the quarterly based data, and M/M actually represents the month-to-month GDP related data. Now, when we actually will try to explain GDP related facts and issues, we will actually try to focus on all these threes, because all these three datas are important. Now, before let's just get back to kind of like details before moving on to many other economic indicators. Here, there is an important term being described, like the value of goods and services. Now, what are the goods? Goods can be manufactured, just like USA produces cars, produces military equipments, produces different gadgets like Apple related products, iPhone, right? Now, these are the goods produced within the country's border that has a global demand, and also in-house in between the country demand. Now, but the services, we'd like to say that USA also offers many services, not only in between the country, but also on the global scale. Now, if we actually go in between depth about these things, we will see that there are two kinds of economy, which is manufacture-based economy, and another is service-based economy. Most of the first world related countries are service-based economy. That's why service-related news and events actually put a very big impacts on the financial markets too. So if we need to focus on the first world related currencies and and obviously in their economies, so we also have to know what kind of service sectors they are actually been offering and they are being dependent up to, right? So GDP as an economic indicator comprises the both of the data, both on manufacturing and also on service-based economical data, and comprised as a comprehensive indicator of economic performance of a country. So the GDP is a very crucial, I would like to say, crucial economic news or economic indicator. Now, there is another important news, which is employment or unemployment related news. Now, most of the first world countries, central bank has the responsibility to generate and offer employment to their own country citizens. Say, for example, every month on the very first Friday, we see that non-farm payroll, which we also call in short NFP, on US data has actually been released. And also, like GBP also releases their employment related data. So does Australia, New Zealand, and many other countries. And basically, if people are being employed more, that means there has been the business related opportunities also been increased. So it creates a positive vibe on that particular currency, and that actually makes that currency a little bit strong. Now, when I say a little bit, because this correlation mostly depends on that country's economic performance, also inflationary condition, and also interest rate decisions. So employment related news is not the most biggest important news, but it plays a very vital role on judging a country's economic strength. So if we see that there has been development in employment sector, that means that currency is going to be strong. And vice versa, if we see that a country has less development, or has been decreasing performance on generating more employment, or unemployment has been increased, in that cases there is a high chance that uh, the currency is performing weak. Then there is another news, which is consumer price index. Now, who are the consumers? Consumers are the citizens who actually consumes different goods and services within the country. Now, this index actually measures the change in the average prices paid by the consumers. Now, if we see that there has been a development or increase in the CPI news, that means that the economy is performing well enough so that the citizens is been buying the goods or the services happily, even though the price has been increased. So at that sense, the economy behaves a very stronger point. Now, on the alternate side, if we see that the CPI report is not that much good, that means that the economy is performing not good. So the people who are offering goods and services, they need to decrease their offering prices to generate more sales. That means the economy is performing weak in that sense. So at that point, we would like to say that the economy, the currency is performing weak. Now, where are the goods and services comes from? The goods and services comes from the producers, right? Especially for the good sides. Now, who are the producers? The producers are kind of like businessmen who are solely related to manufacture or producing different goods, and also in some cases services too. Now, producer price index measures the average change over a time in selling a price received by domestic producers for their output. So let's just say producers price index has been increasing. That means the producers are being offering their their goods or services at a higher prices, and customers are buying on that higher prices happily. So that means the economy is performing good, and in this scenario we can say that that particular currency is behaving much strong or should behave much strong. On the other hand, alternatively, if we think that the PPI news has been negative from the previous month or previous data, that means the producers has had to uh, sell their goods or services at a lower price than the previous one. And that means that to generate sales, they need to decrease their price, which actually, in a sense, is showing that the economy is performing in a bit weak. Then comes retail sales. Now, it's a very important news, I guess, because it shows a total receipt at stores that sell merchandise and related services to the final consumers. Now, it's really a key indicator of consumer spending. Now, if retail sales is increased and also the CPI is increased, that means though even the price of the products is been increasing, the sales also been increased. That means the consumers are happily buying. So that indicates a strength in the economy, and the currency obviously should have been behaved a bit stronger. On the other hand, if you see the retail sales figures are a bit negative than the previous one or previous month, then we can say that the economy is not performing that much well. And in that case, we can say that that particular currency is behaving weak. So we can say that the consumer spending, retail sales, CPI are relatively, correlated, and these, data actually has been showing a little bit strength, right, or weakness. So let's get back to the housing market indicators now. On the first world country, we can say that as they are service-based economy in the most cases, they are also credit-based economy. Means to buy a house or to buy a property, you can apply to bank, and if your credit score is much good enough, then obviously bank will be willing to make you use more of your credits, right? So that means bank can give you access to more loans, and access to more loans means that you can have the access to buy more houses. Now, these data is been comprised of housing stats, home sales related news, and also building permits. Now, this provides insights and the health of a real estate market. Now, why real estate market is a very important indicator on the first world country economy scenario? Because the real estate market generates a lot of people on the employment side, on the sales side, and also on the producers or producer side. So these indicators are also related to the previous other indicators that we have been talked about, right? So let's just say the housing market indicators are positive than the previous months. That means the economy is performing well enough. The home sales is been ongoing, and which is at the good health. And on the other hand, if we see the building permits has been increasing, that means the state or the government is been permitting more buildings. That means more job more employment scopes has been created. So that means it's the economy is behaving as strength. So all these indicators, if they are positive, then the previous months actually shows a little bit strength on the particular currency or the economy. Alternatively, if we see some weak developments or decreasing numbers than the previous month on these indicators, it will actually show a weakness on that particular currency. Now let's just hop into the industrial production related news. Now we also have some news, in Forex Factory or many other news related tracking sites. So there we could see some news related to industrial sectors, related to manufacturing, mining, and other utilities. So if mining facilities or mining related data has been increased, or let's just say manufacturing data has been increased, that means the economy is behaving strong, and that's why that generates more employment, more need to manufacture more or mining more. So that actually shows a clear strength on the particular currency. Alternatively, if we see some decreasing numbers in these industrial production related news, that means the economy is performing weak, so does that currency. Now, let's talk about another important economic indicator on news, which is consumer confidence index. Now, the CPI could be good, the retail sales could be good. You are actually earning more and also spending more. But is that going to create confidence about economy in you? In some cases, you can see that your savings may get less, or you could get some fare from your property, which actually may get less. So that actually will create a less confidence in you, right? And less confidence means that you are not trusting the developments of the economy, and which actually shows a weaker sign on that particular economy. So these indicator, consumer confidence index, measures the degree of optimism or pessimism which consumers feel about an overall state of the economy, comprising and related to their own personal financial situation. Now, let's just say you are earning more, you're spending more, but day by day your debt is actually rising. So it's not actually clearly showing that much confidence as a consumer, right? Because everything is going good on the numbers, but in the other hand, your debt are rising. So rising debt is obviously not a good condition. Now, on the other hand, if it seems that, or if the data shows that the CPI, retail sales, every economic data is been increasing, and also the consumer confidence index, that means without increasing that much debt, you are happily earning more and also spending more, which is a vital indicator on optimism of the economy condition, and most importantly, including the situation of your personal finance. So this consumer confidence index is also one of the important news, which I must add. Now let's hop into balance of trade. Trade balance is a very important news on a macroeconomic perspective. Why? Because every country produces something and in need they import something. Now, after meeting the country in-house country demand, any product the country likes to export. Let's just say Apple exports many of their products each and every year, and that's been bought by the many global consumers all around the world, right? Now, if we see that the balance of trade is been increasing, that means at that particular month or quarter, that economy is been generating more exports than the import, which actually is been increasing the foreign currency in the economy, right? And that is a sign of strength. On the other hand, if we see the imports are more than the exports, in that case, we can say that the country is losing foreign money, and they are relying more on other countries. So that actually shows a negative side of the economy. And if that happens, we can easily say that that currency is behaving weak or should have been behave weak. Now, interest rates. Well, any central bank has a superpower to control the economy with their monetary policy and interest rate decisions and inflationary related policies and decisions. So interest rates, I would say, is one of the very most important economic indicator and news that we can see, and that's been released every month. Now, Federal Reserve's decisions on interest rates can be very significant because that actually shows the borrowing cost that relates to spending and also investment. So if we see the interest rates has been rising with other indicators like CPI, PPI, and many others that we have talked about, that means the economy is performing very well and the currency should get strong. Alternatively, if we see that though being CPI or many other indicators has been performing well, but interest rate has been weak, then we can say that for obvious reasons that the currency should have behaved weak. Now, today is 23rd March 2024. Now, in this week, so far I remember on Wednesday, we have seen development on FOMC rate decisions that the Fed Chair Powell announced that he could, or Fed has been decided 3 rate cuts in this year. Now, at that meeting, the Federal Reserve actually haven't cut any rates. It actually hold that rates, but let's just see what the outcome becomes. Now, the global market scenario, let's just see for a reference on the gold. Now, this is the H4 chart where the FOMC meeting occurred. And we can easily see in this chart that there has been a great supply of US dollar and and that actually created a huge demand on gold. So the price moved from 2155 up to the price of 2220 levels. So these bullish move has actually happened because the Federal Reserve indicated that there might be 3 rate cuts in this year. So that showed a possibility, and that actually weakened the confidence about the economy on the investor side. So they actually chose to buy gold instead of dollar, and that actually create a huge supply of US dollar and demand on gold, and that creates that much price bump. So that's why these interest rate decisions and obviously monetary policy related decisions are very important. Now, we have actually talked about the GDP related news, and if the GDP is actually behaving good, then the currency will behave stronger. And alternatively, if the GDP reports are weak or less than the previous, then obviously the currency will behave weak. So does the interest rates. Now, let's talk a little bit more about inflation. Now, inflation actually erodes the purchasing power of currency. Now, the more inflation happens, the less the purchasing power of that currency will be. And the high inflation can devalue the particular currency. Now, alternatively, more lesser inflation can also have some negative effects, because the less the inflation, people can have more confidence in their economy, but that will actually give kind of like idle, that will actually create an idle generation that don't want to work anymore, and that will actually create a negative impact on business related transactions, and also new business retention and businesses, right? So every central bank wants to maintain 2% inflation target, so that their economy can be very much steady. And the central bank policies aim to control inflation, and thus they want to maintain currency stability. Now, we have talked about employment data previously in this video. So that has been showing in the screen, I guess. So low unemployment indicates a strong economy and strengthen the currency. High unemployment indicates economic weakness and can weaken the currency. We have talked about trade balances. Now let's just hop into political developments. Any political uncertainty can weaken the US dollar as well as the currency. Let's just say when the Biden administration just been elected, we have seen some attack on the Capitol Hill by the Trump supporters, right? At that moment, gold price has actually been risen, because the US dollar had got weak due to the political unstable situation. Now, in previous recent months, in last February or even in this March, we have seen many European nations, let's just on France, that the farmers has been protesting, and they have been blocking the city streets with their trucks, right? Now, this kind of instability actually weakens that currency, that country's currency. And any stable political environments or news or effects can actually support that country's currency and make a very strong impact on the global markets. Now let's talk about central bank policy, and for reference, we are talking about U.S. Federal Reserve policy. Now, Federal Reserve decisions impact interest rates and money supply in-house and outside the country. And changes in monetary policy can affect the value of the US dollar. And the investors who actually been investing, especially on the government bonds and stock indices and many other financial instruments, they closely analyze the Federal Reserve statements and actions. And due to that, that changes their decision. And because of that, the transactions happen and business activity increases or decrease. So Federal Reserve has the more power over the economy by just using interest rates, inflation, and monetary policy related decisions. Now, stock market performance is also important for a country. If the stock market actually been downturned, so the investors, especially the retail or microeconomic level investors, actually loses confidence on the economy, and that actually may have a broader side impact on that particular currency and on the weak side. Now, if we see some good stock related development, stock market good performances, then we can say that they make micro level investors have confidence over the economy, and so the currency should have to be act strong. Now, on the 2009-10, when the housing market crisis happened on USA, we have seen that the stock market performed that much ridiculously bad. Now, at that situation, we have seen a development or the price increase of gold, because we have actually informed you a while ago that any kind of like political instability actually increases demand on commodity and increases supply of that particular currency, that actually make that currency weak. On the other hand, positive stock market performances can strengthen the US dollar. Now, commodity prices has been solely related to US dollar because US dollar has been the global reserve currency, and obviously it's been widely used as global trade agreements. So that's why any rising commodity prices may have alternate effects on US dollar on the weak side, and falling commodity prices may strengthen the US dollar. Now, global economic condition also plays a very vital role on fundamental news and analysis. Now, if the economic condition is good and the global business has been good, that can actually strengthen the US dollar. And alternatively, if we see that global economic crisis has been happening, so in that cases, US dollar may get weak. Now, on the COVID, we know that on the 2020 and 2021 COVID, there has been lockdown in many other countries, especially the whole world was in the lockdown. At that moment, the business activity has been hampered. And because of that, we have seen a certain price increase on commodity, especially on gold, and we have seen many weak side or weak movement on US dollar, for example. So that's the presentation from our slide. Let's just hop into the Forex Factory calendar, and let's just actually show you how to use it. Now, in this week, let's just say we have news related to GBP retail sales. Now, on the previous month, the report was 3.6%, in which in this month it actually been reduced to 0.00%. Now, economy like Great Britain is kind of like huge. So 0.1% can have a big impact in numbers. Now here we are seeing a decreasing of 3.6% than the previous month. So obviously it could have a very much a weak effect on GBP. So let's just check it out. What happened on Friday after the news? So on Friday, after the news been released, let's just see on H1 chart so that we can have a clear idea. So this is where the news has been released, so far I can presume. And we have seen a decreasing price from 1.2622 up to the lower on 1.2575 level. So these weak move actually happened with a weaker side on GBP because the news has been released kind of like weak. Now there could be some scenarios where actually the price may act a little bit weird, or the news report is been kind of like mixed kind of like scenario, especially on Thursday. Now on last Thursday, we have seen that US dollar has released flash manufacturing PMI and services PMI, and of which the manufacturing PMI news was positive than the previous value, and it was the services PMI related news was got negative than the previous value. So when we use Forex Factory or these related news tracking websites, we have to have a clear understanding that the actual or recent prices must have to be calculated with the previous month's value, not the forecast, because forecast is actually a number which has been prepared by many economic formula by independent economic organizations, and the website has actually been put over here. So this is an idea, not a number, but the previous value and the actual value are the real numbers. So we have to be very careful on that too. The most important thing that Forex Factory related websites see or tell us that the better than the forecast shows a green number and may show some positive impact, which is actually very much false. It's a falsified information. You have to make these thing better than the previous month's value should have been showed the green number. Okay, so we have to have a very much clear understanding on that before tracking the news. Now, to track the news better, I would like to suggest you a website that names tradingeconomics.com. In this website, you can have kind of like economic news on any countries you name, even third world countries like Uganda, Ghana, and many other. Let's just say as we trade mostly on USD related derivatives trading instruments, let's just say we write United States. Now, when we write that, we are seeing an option which says United States indicators. Now let's just hop into that. Now so in this case, we are seeing that it's showing a clear understanding, an overview of total United States economic indicators. Let's just say if we click GDP, these news actually shows us segregated segments where we are seeing a GDP from agriculture, from construction, from manufacturing, from mining, from services, from transports, and etc. If we click the labor side, we will see NFP related news, government related payrolls. We will see labor force participation rate, also labor cost, job offers, wage growth, many other indicators that actually not been shown in the Forex Factor related websites. So to dig down more on an economy, you have to check on these kind of websites too. Also, if you see the money portion, you will see interest rates, you will see central bank balance sheet, foreign exchange reserves, debt to GDP ratio, and this kind of like important news. Like private debt to GDP news is not been shown in Forex Factory, but this is also shows a clear statement on a country's money-related performances. And also, we will see money supply related information over here. If we click trade, we will see the balance of trade related information in terms of export, in terms of imports. Like as of we can see on the last value, the exports value is less than the import. So from the fundamental analysis point of view, if we focus on only the trade, the US should have been performing weaker, right? But fundamental analysis should not be just to we can't be decisive over just only one news. We have to check other newses, and we have to find the interlink between them, and then include the stability of political situations with it. And within comprising all these decisions, we have to be decisive on a fundamental analysis facts. So fundamental analysis is not just you have to check on a news. If it is positive, then currency is strong. If it's negative, then the currency weak. It's not like that. You have to see the in-depth picture and overall picture, and have to relate it with the political development, geopolitical development, and also global business related participations and development too with it. And comprising all these informations, then the fundamental analysis will have a complete figure of understanding, and obviously that helps to create you a decision over the fundamental analysis. So this was our first class, and we actually been showing you ways how to track financial market news and economic indicators. And we also have shown you how these economic indicators the works, how they behaves, what are those, and even if you choose GBP, let's just say British pound US dollar, yeah. So if you click on that, you will see GBP related news, only British pound versus US dollar related news. Now, if I write United Kingdom and click on it, you will see these overall pictures of GBP. Now, if you choose to trade on the currency GBP USD, you have to have a clear understanding of every kind of like indicators over here. What are their values comprising to United States indicators. Now, there is a very important thing been described in this website. Let's just say balance of trade. If you choose balance of trades, then there is a thing called forecast over here. Let's just say we give it on the 10-year max. We are seeing that the current value was on the March was minus 64. Now on June, it may get minus 67, but on the September, it may the balance of trade could be increased up to minus 55 USD on billions. So this shows a forecast. So with this forecast, you can also have an idea that how the economy should have been behaving, or is it actually behaving according to the forecast. So you can have a clear idea on the fundamental side what you should do and how you have to use your technical aspects or indicator related strategy mixing into the fundamental decisions you are receiving, right? So thus, it will help you to understand a complete picture of a trading, including technical analysis side, fundamental analysis side, and also sentimental analysis side. Now, in our course, we have already know that we are actually offering courses on Elliott Wave 2, which is a mathematical and a good technical analysis tool. So those who are interested, you can also hop into that courses. And obviously, with these fundamental course, I hope you will have a clear idea how to track down fundamental factors and how it will help you to make a decision on your trading. So see you on the next video, and let us know if you have any questions or concerns. And I hope as an admin of FWE and the mentor of this fundamental course, we all will help you in your trading journey so that you can be a very profitable trader. So thank you. So hopefully you will see the next video, and we will talk more about the fundamental analysis in our next video. So see you. Have a nice day ahead. Bye.